Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorne.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto asset.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. I'm your host, Alex Thorne, head of firm-wide research at Galaxy. Bitcoin, not zero, and we have a great episode for you. Back in New York, we have Willem Schroe, co-founder and CEO of Botanix Labs, which is building an innovative new type of Bitcoin Layer 2 network called a Spiderchain, not a roll-up. Very interesting conversation with him. I encourage you to listen to that to understand the sort of breadth of things people are building in this emerging Bitcoin Layer 2 landscape. And of course, we'll check with our good friend Bimnet Abibi from Galaxy Trading, as always, to talk about markets, the sort of major, even panicky move that happened over the weekend and earlier this week, driven at least the straw that broke the camel's back was the Japanese interest rate hike and the unwind of this dollar-yen carry trade, or the yen-based carry trade. We'll get Bimnet to explain what that means. Before we get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Feels good to be back in the studio, Phineas. I think people, but I have to say, shout out to Phineas and his team for the excellent quality of our Nashville tapes, which have now fully run. Check out the feed. We had great interviews with Dylan LeClaire, Casey Rodomore, Craig Wormke, Stephen Lubka, Christian Catalini, and Harry Sudak that were really great. So thank you to Phineas and his team for helping to make that possible. Let's hop right into the show. Let's go now to our guest, Bimnet Abibi from Galaxy Trading. As always, Bimnet, welcome to Galaxy Brains.
Thanks for having me.
We're back. We are here in New York City. I haven't been in this city for almost over a month.
I haven't left.
There you go. You've been tied to the desk.
I'd say chained, imprisoned.
Well, let's talk about
it.
Let's talk about it because it was sleepy. Then it was bullish, leading into Nashville. And Nashville, we touched 70K on Bitcoin on the back of former President Donald Trump's speech in Nashville. And then we were mostly okay last week. And then over the weekend, and even at the end of last week, some deleveraging started to happen. And then, of course, there was a pretty major crash in equities, in cryptos, in Bitcoin on Sunday night, Monday morning, and FX. What happened?
So there's just so many things to talk about.
Let's start with Japan, though. What happened with the yen?
So basically, for the past year and a half, dollar yen has been steadily inching higher from, let's say the 130s all the way up to like 161, right? And that's a function of the fact that U.S. interest rates and other G10 interest rates were significantly higher than Japanese interest rates. Japanese interest rates were, below zero, essentially. And, they were slowly raising them, by 10 basis points and a little bit more. But essentially, because of that huge interest rate differential, folks were constantly longing dollars and shorting yen and earning the carry. The most popular carry trade was, MEX yen, where you super high interest in MEX and super cheap cost to borrow on the yen. And so there are a lot of folks piled into the trade over the past year. The BOJ has tried a handful of times to intervene, but ultimately it failed because the currency just kept going higher, and so it reached new highs. And so, going into the BOJ meeting last week, they were expected to hike rates and kind of slow their bond purchases and broadly kind of like take a step back from all the easing measures that they have. And they came out, more hawkish than expected. And basically that started a huge kind of deleveraging in that complex. And so high level, what the carry trade is in the context of the BOJ is, folks borrow yen at super cheap levels, then they sell it short to go buy a different currency, and then they go buy an asset with that currency. And so basically there's a lot of money that was in Japan that got moved offshore because there's no place to actually earn any like substantial interest on that money. And so over the past 15, 20 years, right, there's been a lot of money just going from Japan offshore to purchase these assets and to conduct this quote unquote carry trade. And what happens when, the yen starts massively appreciating is your liability starts ticking up in value. And then in addition, when the asset that you've purchased also starts going down in value, let's say U.S. equities or commercial real estate, whatever it may be, like you got hit with like a double whammy and then margin calls and then cycle of deleveraging. And so you basically had, the start of a very big unwind. The way I describe it is, this dollar yen trade, like basically front end interest rates in Japan have been sub 1% for my entire lifetime, basically. And so that carry trade has been building for 20 years.
Yeah.
And, over the past week, 2 weeks, you've had an unwind of that, but it's just getting going.
Yeah.
Right. And so all these dollars that have flown, offshore and to the U.S., et cetera. And basically what's happening is these corporates need to bring back some of the money home, right? And these pensions, et cetera. And so this repatriation flow has caused a bid to the yen. And it caused risk assets to sell off. Now, the risk asset sell-off is a function of the BOJ stuff, but it's also a function of the data that you got in the U.S.
Right.
And the data has constantly been slowing on a consistent basis here
For
in the
several
U.S.
months now.
A couple of months. And you had this non-farm payrolls print on Friday that showed material weakness in the labor market, even though it was a gain of like 113,000 jobs. Like the private sector component was particularly weak, and we've seen some other jolts and other kind of labor market indicators that are softening. And typically, the concerns around the softening labor market are super important because the Fed has a dual mandate, right? The inflation and full employment, and so in instances where unemployment starts ticking up, like that starts to trigger like, holy shit, like, am I going to be on the wrong side of my mandate? And that specifically was what Powell highlighted during the last FOMC as something that would trigger him to be more dovish or to remove restrictive measures of a monetary policy. And so everyone is focused on the labor market because if it cracks, right, then the Fed will be forced to be more dovish. And now kind of what the read-through was from that soft print was that, you could potentially be heading into like a hard landing scenario. And that's based on the fact that typically when, you see unemployment rise by 50 basis points or so, you're likely going to see, there's normally like a bimodal distribution, basically. So you're most likely going to see a big uptick in unemployment. And in addition, like, when you think about like what actually causes a severe downturn in the market, it's really tough for the market to slow down without people losing their jobs, because as long as people have their jobs, they have a stream of cash flows. They can meet their mortgage payments. They can meet their credit card payments.
They can buy stuff at the mall. A lot of them will get 401k contributions.
Correct.
And, yeah.
And so like when you start to see that slow down, in the context of like, rates already being super restrictive, like that can actually lead to like a pretty big slowdown. And so folks started to price in more of a hard landing scenario, more of a recession probability.
And then the BOJ hiked rates more than expected. Also,
there was chatter about it going 25 basis points. Now you've had a bit of a retracement in that move because one of the BOJ governors came out last night.
He said, "Don't worry,"
and he's like, we're obviously going to consider like basically financial conditions. Like they're not going to hike rates when like the Topix is down 10%.
Yeah, I mean
right?
they were on our Sunday night there, Monday morning. They were circuit breakers.
Yeah, so
like if people remember during COVID,
down 12%.
The only time in our recent lifetimes that's happened was like March 2020 during COVID, where they literally halt the entire stock exchange.
Yeah.
Crazy.
And just to give you some context, like MUFG, like Mitsubishi Financial
biggest bank in Japan, right?
Biggest bank in Japan was down 20% Monday night.
Yeah.
If I told people in the U.S. that J.P. Morgan Chase was down 20%
it would be financial chaos in this country.
Okay,
It's the
that's the polite way of putting it.
Yeah, that's the largest
People would
bank
be
in the
freaking
world, right?
out.
JPM, I believe.
Well, one of them by asset, but
Well,
yes,
there's
yes.
measures,
But
yeah.
sure.
But yes, this is a big deal. In Japan, what, the fourth or fifth largest economy by GDP? Fourth, I think?
I think the
third?
It depends on if you block the EU as one or
Sure.
not.
Somebody was
and
asking me, they're like, oh my God, like something blah, blah, blah can happen in Japan of this much of a thing. I was like, well, to be
have
clear,
so much money.
it's literally
Yeah.
like a top economy in the world.
Yes, absolutely.
And it was also the only, let me just step back actually. I want to talk about the carry because just to what I'm hearing from your explanation, borrow cost, the cost of capital in Japan was basically zero or very low. So it was a great thing to borrow. You had almost no interest payments to make. So you could borrow.
And in addition, what was happening was you borrowed that thing, but it was also depreciating.
So it was
in
weakening
value.
until recently. It was weakening.
Correct.
So your repayment was actually going down.
Yeah.
You were paying almost nothing in principal borrowing cost, and the value, the total principal of your repayment was getting cheaper over time.
Depends if you
Right.
hedge it or
what you were
whatever,
using it for. But
but that was the
so
whole
that made
idea.
it, so people were loading up though, going there for effectively liquidity, cheap borrowing. It's similar to when we had basically zero rates.
Correct.
But in general, theirs were even on real terms over the past negative.
Yeah.
So sometimes you're getting paid to borrow.
Yeah.
And then they're using that to buy other things like risk assets, like equities, U.S. tech stocks, right?
Sure.
And so to unwind this trade, you just like you have to back out of all the things. You have to sell what you bought, use that to rebuy the yen. That causes the equities to go down or the other assets. I mean, if you were doing Bitcoin, then it would be Bitcoin that goes down.
But nobody was doing it.
Well, no, not really, because this is really what are we talking
It's
about?
mainly
Large institutional traders, hedge funds?
Big, like Japanese pensions, like real money type of folks.
Deep, big capital.
Yeah.
But
And
that
then
means
some
even a
speculators. Yeah.
Okay, so now that this has happened,
And it's just beginning.
okay, so
guys.
what does that mean?
I mean, basically,
do we expect a lot more like
over time? Yes.
So is it merely a weakening bid that used to be here because of that carry trade, or is it like going to be is it sell pressure?
Yeah, I mean, I think what you're gonna see is these real money types. Like, they're not stupid, right? They're not gonna sell assets when they're puking at the dead lows, right? And so it's gonna be a methodical kind of unwind of some of those trades, and they'll slowly, happen over time. You had the kind of dramatic like margin calls and kind of big aggressive move, taking out all the speculators, blah blah blah, and now you'll just see like a slow trickle of that stuff.
Yeah.
But it really depends on how aggressive the BOJ is going to be, the data in Japan and stuff if things start to cool.
Part of the reason, right? I mean, for the hike here is that they are dealing with their own inflation.
Correct.
Right. So just like us, they've got to do something to keep their inflation down for their population.
Yes. But they also have a big debt issue.
Yeah.
Where if they hike rates too much, then the interest that they're paying, and so it all leads to Bitcoin. But let's be honest.
I was going to say, gosh, it's like a Rube Goldberg machine. When you create like a machine with like pulleys and like baskets and all that thing, where it's like this overly engineered system.
Yeah,
it's just extremely complicated ball of wires where you're like, oh crap, we got to do this thing to do that thing, but if we do that thing, then this other thing's going to happen.
No, I mean, yeah, you're right. I mean,
pretty rough.
It's like you can't have like I forgot what the analogy is, but you can't have like a free floating currency and like centralized economy. That's where the issue lies. And so if they did nothing, their currency would have like kept depreciating, and they would have to like constantly intervene, and the market would have bought it up. So then they are like, well, we have to back away from these stimulus measures and raise rates back to real levels. And then, holy shit, what happens? You get a massive deleveraging event, and your currency appreciates way too quickly.
Right.
It leads to asset sell-off because think about this, right? Like what Japan's economy, right? They run a huge current account surplus. All of their corporates earn money abroad. They sell cars in America.
Yeah.
And Toyota then
technology
takes the Toyota takes those dollars and so they have their net long dollars, and so when dollar yen collapses and the yen starts appreciating, that's some mark-to-market loss for those guys holding the dollars. And so, there's a good reason why the Topix is down and Nikkei is down, et cetera. And so it's all kind of intertwined in a way.
Pretty wild too.
But realistically, like, what does it come down to? And like, what are the lessons you can take away from this? But the lessons are you've got a huge, complex financial market that's basically driven by central banks.
Yeah.
Right. And the liquidity that they inject, the facilities they have, and it's a super like controlled thing. And ultimately, like, there's just so many unintended consequences of some of the policies that we've just, done. And it, people like to think that it's proactive policy, but they're just reacting. It's like, those machines with the groundhogs, like they come up and
the alligator head or whatever.
You
the
hit
frogs.
one and the other one comes up, and you hit the other one. It's like boom, and it's like think about it now. Like in the U.S., it's like okay, you start easing, you take rates to 3%. What happens? Some would argue that means you're going to be back on the path of like reinflation in short order, because people then start being like, holy shit, I can actually afford a mortgage now. Maybe I'll start buying houses again. Maybe they'll unfreeze the housing market.
Right.
And, asset prices might start going up again. And it just leads to this endless loop of like financialization that makes you be like, what is really the value of money? And what are these central bankers like actually doing?
Yeah. They're tinkering perpetually. And they're it's again, that's the system. Like they're forced to do that.
Yeah. And so like that's why like the value proposition of Bitcoin in these instances like gets highlighted. At the same time though, and what I would remind listeners is that like it is still a financial asset.
Yeah.
And when risk assets trade to one correlation, like there's no risk asset that is safe. And I'll give you the example of gold during 2008. Like it was still down.
I mean, gold was down on Monday. It was down 2+%.
Yeah, absolutely.
Not,
it
it
wasn't down on Friday.
Yeah, it wasn't down the
15
15 that Bitcoin went down. But
and
I mean,
you have geopolitical concerns.
Because I saw this, Peter Schiff and others were, dunking on Bitcoin. So much for store of value. In a risk-off move, it went down.
But that's also what happens to gold.
And it's also separately, the Bitcoin bet isn't that you can't engineer a global decentralized store of value from 0 to 1 like magic. Like it's currently capitalizing. It wouldn't have growth potential if it had already become a stable store of value, right? Like part of the Bitcoin bet today, if you invest in Bitcoin, is a bet that it will become that in the future. It's obviously still in its infancy in its early stages, so it didn't seem fair that dunking to me.
Yeah, I'm not gonna entertain anything Peter Schiff says, but ultimately, I do think that you do want to be in hard assets like gold and stuff, and the U.S., Japan. I mean, everywhere has its own challenges. I mean, China is dealing with a massive slowdown right now. Their property market is under a ton of pressure, and it's being masked and stuff. And that's the second or third largest economy, however you want to think about it.
Yeah.
And then, like in certain places, like they've tried all of these efforts to get inflation to come down, but it's still going higher. And like, there's just so many like different like problems out there.
Yeah.
That. I don't. To be honest, like I hope that Bitcoin is an answer for this stuff.
Right.
But it's not.
It's not the answer.
It's
right?
not the answer.
There's a lot of other factors here.
Yeah.
Do you think the Fed markets are pricing in 5 cuts now by the end of 525 bips cuts by the end of the year? People are speculating.
It's come down a little bit.
Okay. Well, there was some freak out in the
there
rates market,
and it's closer to.
But some people are calling Japan's more aggressive than expected hike a grave policy error. I've seen other people calling the Fed's lack of a easing cut last week a grave policy error.
Yeah.
What should the Fed do in your mind now? Should they definitely cut some amount in September? Some people were even talking earlier this week when there was panic a little bit in financial markets that they should be an emergency cut.
Yeah.
What's your view on that?
I think it's pretty clear from the data and what we're forecasting that rates are probably too restrictive already, and that you should be closer to neutral. And neutral, depends on what your idea is, but let's say that's 3%, 3.25%, somewhere around there. And so, traditional monetary policy analysis would tell you that you should get to neutral as soon as possible. And so I would tend to agree with them that they probably should have started cutting in the July meeting. but it doesn't really align well with kind of how the Fed does things. Like Jackson Hole is typically when they announce like a big, policy shift.
Yeah.
It's also just the election makes things a little weird and stuff. And so I do think that they should have been reducing. I'm not a fan of the emergency cuts because, like, the economy is still fine. Like, growth is still fine. The unemployment rate's only at 4.3%. And, like, core PCE is, like,
major
right
U.S.
around.
stock indexes are still up like 10 to 15% on the year. It's not like we're in a terrible
we're not,
downturn or anything.
We're not in a
yeah, so it would
downturn.
signal weakness that isn't actually there.
Yeah,
to do an emergency cut.
And I, prefer a Fed that isn't panicked when there isn't any reason to panic. And so, but I do think that they should be cutting, and I think they should. I believe just front load the cuts.
Just go 50, 50, 50, and then we're
50,
there.
And then you're at neutral, and then you observe.
Yeah.
Right. Like it's a difficult kind of place to. I don't want to be Jerome Powell. He has one of the hardest jobs on the planet.
He handles it with quite poise.
He does. He does.
Quite a lot of poise.
But it's whatever you do, there's a consequence to it, and it's like. If you ease too early, we just came from a period where inflation got to 8%.
Yeah.
Are you concerned about that?
Oh, yeah.
If you don't ease, the deficit, the national debt, and people are going to start losing jobs like crazy.
And let's be real, the central bank, regardless of whether they are part of the U.S. government or not, they're not. They are part of America. Like the national debt does matter to Jay Powell and the rest of the 20,000 Federal Reserve employees. So, like, they can't hike forever. Like, that's just a fact.
No, they can't.
That's
the
a fact.
Numbers don't.
They don't add up.
But it's like, ultimately, like, where are we headed? It's like MMT world. Like, huge debt to GDP, the Fed constantly buying the treasuries the U.S. Treasury issues. And, anytime shit goes crazy, everybody wants a bailout.
Yeah.
Everybody wants a stimulus check.
And they have conditioned the market for that, unfortunately.
Absolutely. Literally, it's helicopter money.
Yeah.
Like, they just send people money.
Yeah, you didn't
And
even you couldn't even like
wired
not,
it to your
I was going to say
accounts.
because if it's not like they mailed a check that you could choose not to deposit.
No,
it just
no.
appeared.
Just appears.
They used your tax refund,
Correct.
dollar bank account information to just literally airdrop it into your account.
Yeah, and then inflation isn't going to come from that. Like
Literally, here's free money.
In hindsight, you're like, what? How on earth did you guys think
Not to mention,
that wasn't going to cause
look,
it was one of the biggest policy blunders.
It really was. Think about like $800, or I think what most people got is something around there. Right?
More. You got three of them.
Okay, so like $2,000. Now that probably helped for about a month or two, but at the expense of effectively net 30% price inflation over 3 years. No one, if they could know.
It wasn't even just that though. You had the PPP loans.
No, for sure,
right?
For sure.
The student loan forgiveness.
But I'm just saying, it seems so nice.
So much
the
money.
stimmies seem nice.
Yeah.
But I would have absolutely given that money back to not pay, $15 for a breakfast burrito.
I agree.
I mean, I think most people would now.
But it's like,
it is kind of funny. I to make fun of the populace a little for demanding the bailout, demanding the stimmies, and then being like, "Why do we have inflation?" It's like, well,
no, it's just like
if we'd all agreed to not spend it,
it's the corporates. They're price gouging.
No, dude, we all went out and spent that money on GameStop stock.
No. Let's just do universal basic income. Just send people money, and
it's
that'll
troubling.
fix problems. But yeah.
Well, we will catch up with you again. There's more to come here. Obviously, Bitcoin and crypto is repriced a bit lower, but I mean, at 56K, it's still, if you told me we crashed to 50K a year ago, if someone had busted in here while we were recording, we would have laughed at that. So I urge people to have some perspective. By the way, equity is also, like I said, I mean, if you're a passive equity investor, like most Americans are, you're still doing fine. Yeah. But it did seem scary. It feels like that Monday of this week will be a pretty famous market day. People will remember that day.
They will, but it wasn't even that crazy. I mean, the Japanese moves were crazy, and the emergency cut pricing is crazy. But I don't know. I feel like just so desensitized because I work in crypto.
There was that thing where it was like there's all these memes going around where it's like a little baby and he's crying and it says -5%, and then it's like they're giving baby shots is what I saw, and a bunch of them are they get a shot and they cry. It's what a baby does usually when they get a shot. And it's like stock investor -5%, and then there's this one of a baby getting a shot and he just doesn't do anything, just looks at the doctor like this, and they're like crypto like -75%. He's just like unfazed completely.
Unfazed. We don't have a central bank to bail us out.
Well, let's go.
it goes crazy.
Yeah, no, we don't. Let's go back into crypto next week a bit more.
Absolutely.
There have been some interesting things, Bitcoin dominance, a bunch of interesting sort of things happening there. But we are over time. So Bimnet, my friend, thank you for coming on Galaxy Brains.
Thank you.
Welcome to our guest, Willem Schroe, founder and CEO of Botanix Labs, which is building Spiderchain on Bitcoin. It's a type of layer 2. Willem, welcome to Galaxy Brains.
Great to be here.
We talked at PubKey, I guess a couple months ago, on a panel about Bitcoin L2s and layered scaling technology for Bitcoin. So I was really excited to have you on Galaxy Brains to dive into it because, and we're going to get into this, but primarily because a lot of the teams are building rollups, taking Ethereum technology, a lot of them ZK rollups. None of them have launched yet, but and trying to roll them up to Bitcoin. But Botanix is taking a different approach to layered scaling, or a different layer 2 approach, not a rollup. What is a Spiderchain, and what is Botanix Labs, Willem?
Absolutely. Let me take a step back why we're building the Spiderchain as it is and why we're not building a rollup.
Okay, yeah.
So around 2 years ago, I saw the power of the EVM and I wanted to bring that to Bitcoin. And actually, the most obvious thing, if you look at Ethereum, is like, okay, let's build a rollup on Bitcoin. It makes so much sense. So I dug deep into like how we would build a rollup, what the different downsides of different rollups and rollup technology are. And I realized that I wanted to build a more decentralized layer 2. And so I started designing a layer 2 that's capable to be decentralized, fully EVM equivalent, and capable to be fully run on Bitcoin. And out of that design exercise came what's called the Spiderchain. So the Spiderchain is a decentralized layer 2 where anyone will be able to participate, where anyone will be able to run a full node. That has some downsides and it has some upsides. But in essence, how it works, it creates this decentralized network of multisigs, in essence. One of the realizations that I had is everything is a multisig in the space. And so when you accept that reality, you can actually make the best network of decentralized multisigs, actually. And that's what we aim to do with the Spiderchain. And happy to go a little bit deeper into how it actually works.
So it's not, so when you say decentralized, what I'm hearing too is maybe I don't know if it's criticism, but a differentiation from rollups, which are today, I think on Ethereum, there is no decentralized sequencer that I'm aware of on any rollup, right? So the Arbitrum sequencer effectively controls the entirety of the Arbitrum rollup. If they censor you or steal from you, there's some remediation with, you can submit a fraud proof, and like there's some ways that make it safe in that sense, but right, they're not currently decentralized in that way.
Correct. And I also don't think they should be decentralized, actually. I think rollups go for extremely fast blocks. Like you can go, I think Arbitrum is at 0.25 seconds. Now, we all know from the blockchain trilemma, if you go super fast, you cannot be decentralized. However, you can be trustless. And so the rollups go for more a trustless fashion, either optimistic by providing a capability to provide a fraud proof, or with ZK proofs. Now, that centralized aspect has some downsides. Like you can get censored. Like it's going to be a central server running somewhere in the world.
It's somebody's computer, basically, right?
It's a database that's running and generating some proofs, in essence. Right. That's it. And you can make it trustless. So very good solutions in the design space, but comes with downsides of censorship, for example. If that central party doesn't want to include your transactions, then you're kind of censored from the whole virtual machine or the whole experience. Now you can have this type of solutions where you can do a base layer transaction to force a transaction on the second layer, but you're kind of still censored of like using the.
You probably would ultimately have to. You'd ultimately have to leave
the
rollup ultimately, right? You wouldn't
exactly.
be able to. Yeah.
If you have to do every transaction on the base layer, then basically you're still censored.
Yeah.
So that's one of the downsides. Second downside is liveness. If that central server would go down, okay, what then? And a third, maybe more longer term question is like upgradability. Who actually can upgrade the code? That is always the question you have to ask yourself. Now, there's some really good, smart people working on it, but that's in essence what rollups are going for.
Right.
Centralized, trustless solutions. And I felt Bitcoin needed more a decentralized layer 2 as a first step. And so we want to be more like an Ethereum. We're never going to be as decentralized as Bitcoin, but we can be as decentralized as Ethereum. And I think that's very much needed if you want to build a financial system on Bitcoin. And that was the original goal.
So we have a series of overlapping multi-sigs, which is the Spiderchain. Is that right?
Yeah, let me maybe
give us
take
a little
step back.
Yeah.
What is a Spiderchain?
Yeah, give us a little more of the topography, what this
Yeah.
network actually looks like as a network, whereas a rollup is sort of a centralized single state updated by, a sequencer. Like, what is the Spiderchain in comparison to that?
Okay, so for the people familiar with the Lightning Network, when you look from a high level, the Lightning Network is a whole decentralized network of 2 out of 2 multisigs. If you and I open a channel, that's a 2 out of 2 multisig.
Right.
And now park that idea, but it's very similar. So what you will do is you will create a series of multisigs. So for example, if you would have 10,000 participants all running a full node, what you will do is you will randomly choose 100 participants out of the 10,000 and you will create one single multisig. And then you do that again. You create a second multisig. Again, you randomly choose 100 participants out of the 10,000 and create a second multisig. And then a third and a fourth and a fifth and a sixth. And after a while, you have this decentralized network of multisigs where anyone can permissionally participate. And then all those full nodes, those 10,000 or 100,000 full nodes come together in a proof of stake consensus, and that secures the EVM. And that whole thing runs on Bitcoin.
So then
that's a little bit how it works.
Yeah, that's helpful. So then the nodes themselves, are they all executing every transaction inside this EVM? Each time a transaction occurs does it form sort of, let me ask a different way. We have the overlap. We say, okay, let's say it's 100 nodes total. And so they're all in all the multisigs. Or let's say it's 1,000, but there's these overlappings of 100. Obviously, there ends up being like some, I don't want to say central points because I don't mean like central points of failure, but like some enough overlap that you end up with sort of like a core of nodes that are forming this heart of the Spiderchain. Is that, like, where does the state actually exist? Is every node, like, are there actually just multiple states? Each multisig is its own EVM, or how does this come to form a network? Or yeah,
there's one single EVM that runs on top of it, and everybody runs an EVM. So very similar to like Ethereum. Actually, the best comparison of what we're doing is trying to build Ethereum, but then literally on Bitcoin as a second layer. And so everyone will run that same state machine and virtual machine.
Got it.
Difference with Ethereum, of course, is we will use Bitcoin as the gas fees and you will stake Bitcoin.
Yeah.
So that's a little bit
interesting.
Actually, it might be interesting for the audience to remember how the Spiderchain works is maybe where the name comes from.
Yeah.
So when you think about this series of multisigs, I actually drew it on a whiteboard. And so if you draw a multisig, a circle with 8 participants, and then another circle with 8 participants, and another circle with 8 participants, and it kind of looks like a multisig kind of looks like a spider. And so a series of multisigs became like the
they overlap ultimately and form this web, basically, right?
Yes, because some of the participants will participate in some of the multisigs and others in others, and so you create this whole network after a while.
That's kind of to your you had set this up before, but sort of as a comparison to the Lightning Network. Just like you and I may have a channel, and then you and Phineas may have a channel. I don't have one with Phineas, but the overlapping of your channels and my channels ultimately forms this sort of decentralized network.
Yeah.
There is no common state on the Lightning Network, but that series of overlapping relationships does form like a distributed network.
Correct.
And that's how the Spiderchain kind of feels too, topographically speaking.
Yes.
Very interesting. So so let's go forward now. So we have an EVM equivalent network. I was going to say blockchain, but that's not exactly right?
Yeah.
Does then the Spiderchain post data to Bitcoin? We just published this report about data availability for rollups on Bitcoin. Is there some checkpointing into the Bitcoin blockchain? Is there some way to what's the relationship between that state in the Spiderchain and the Bitcoin layer 1 state?
Very good question, and that's where you have to park the idea of layer 2s as rollups again. So with rollups, because you are centralized, that basically comes with a few downsides. How do you get that consensus from the base layer? How do you actually know on the base layer what's happening? How do you do unilateral exit? How do you force transactions on the second layer? You can only do that if you have the data on the base layer or at some location that you know that the centralized party doesn't withhold the data, for example. Or like at some point changes the data, right? Like what if that centralized party says like, oh, let's change the database in the backend without anyone knowing,
Right?
They could do that, but not if you post the data back to the base layer. And so that's why you need to do that. Now, if you think about Bitcoin, for example, why doesn't Bitcoin have to post the data somewhere? It's because all the data sits in this decentralized network. And so when you have a decentralized network, all the data can just sit on the second layer. So the issues that you have with rollups, like in terms of unilateral exit, in terms of forcing transactions on the base layer, in terms of data availability posting on the base layer, all come from the fact that they're very centralized. Once you have a decentralized layer 2, you don't have to do that.
It's almost like blockchains all the way down, right? I mean,
Yes.
It's sort of like, Ethereum doesn't post its data somewhere because it is the data availability, at least for itself, for its layer 1 transactions. Okay, so then the question then of like what has higher state data availability fidelity is a question of the proof of stake Spiderchain networks quality of immutability and replication and liveness, not one of how it connects. But because rollups don't actually have a decentralized network, right? They have to post somewhere.
Exactly.
I see. So it is different in that sense. So you're not subject to the same network-wide, for example, data posting costs that a rollup might be.
Exactly. Like we can keep the transactions extremely cheap on the second layer because we don't have the base layer cost for that data availability. It's actually very interesting. Once you go for the decentralized layer 2 design, you don't have the issues that you have from the rollups. Now that of course comes at a cost. If you want to be decentralized, then basically you need to gossip all the information between your network and between your peers, and it comes at a throughput cost.
Yeah.
Like Bitcoin runs on 10 minutes, not on 0.1 seconds, right? And so rollups can be extremely fast. The Spiderchain cannot go there because you will have to gossip around the whole network, and so that's the cost of it.
So then let's talk about some of the other aspects. One, we talked about the trustless exit of the rollup, right? Which is, I think you explain it really well, right? We're not optimizing for decentralization with a rollup. We're optimizing with a rollup for being able to unilaterally exit if they do mess with you, or in general, and then getting transaction throughput and functionality, but not, at the expense of decentralization. One of the big questions with Bitcoin rollups in particular, but with all layered networks and everything is bridging, right? And with Bitcoin in particular, because Bitcoin's script is limited and also hard. We were talking before this. There's only perhaps a couple hundred really talented Bitcoin developers in the world. We don't really have a bridge yet for a rollup on Bitcoin. I know there's people working on variations with BitVM. There's the Taproot Wizards folks are working on CatVM, which is about OpCat. I don't think it's about a kitty cat. But how do you envision, or how will the Spiderchain users move Bitcoin between the L1 and the Spiderchain?
Good question. So when you want to move from the base layer to the second layer, you will go to one of these full nodes and say like, look, I want to send Bitcoin, give me a deposit address. So you generate a deposit address that's part of these decentralized network of multisigs.
I see. Wait, so just before we even go forward then, so that multisig then, it's they have an XPub basically. They can just generate deposits that the multisig controls basically at any time. New addresses, just like any multisig.
The cool thing is we tweak that by using your own EVM address.
Interesting. So the deposit address on Bitcoin would then, on the L1, would then be my address on the L2?
Exactly.
Interesting.
Yeah, so your deposit address is uniquely linked to your EVM address.
This is very interesting. Partly, one of the things I was thinking about with the rollups, and actually that is probably, I would argue, the single best UX feature of the Ethereum rollup world is that you can just use the same address everywhere because they all use the EVM. They're all just EVM addresses, which is very convenient, right? You can say, oops, crap, I accidentally sent that to you on Arbitrum. No worries, though. You have the keys in your Ethereum wallet, so just like go on Arbitrum and collect it. Okay, sorry, I didn't mean to interrupt, though. So you would give us a deposit address, a node would. So how would I literally go to this node? I mean, I'm going to go to like a website like spiderchainnode.com, and somebody's going to be like, sure, send it here.
Yeah, so basically you can you can test it out actually on our testnet. So you go there, you connect your MetaMask or any EVM wallet, and a deposit address is generated. The cool thing then is you can send Bitcoin, of course, from anywhere. You can withdraw from Coinbase to that address. So from Coinbase, you withdraw to that deposit address, and you'll have the Bitcoin on the second layer in your EVM wallet. You never even see the base layer. Or you can send from a ledger or any other wallet, basically.
So then the actual mainnet L1 Bitcoin is now held by the whichever of the 100 quorum multisigs I've sent it to.
Correct.
Okay. And then do they release on the Spiderchain like SBTC or Spiderchain BTC basically? It's like a
yes.
Right?
So you get the native currency of the EVM is Bitcoin. So you get that Bitcoin in your MetaMask.
So every piece of Bitcoin on the Spiderchain is like effectively a replica of locked multisig actual Bitcoin.
Correct.
So if I want to, so the supply, quote unquote, of Bitcoin on the Spiderchain, the total supply is whatever the total locked Bitcoin held by the Spiderchain multisigs on L1 is.
Correct.
Got it.
Exactly.
So you have to like when you eventually, so you're in testnet right now, right? So when you launch on mainnet, whenever that is, which I may ask you about in a few minutes, but does that make it hard to bootstrap this network? Do you have to like put some Bitcoin in there just to get the machine operating, right? I mean, because a lot of these other networks, of course, use their own altcoin as the base token, so it's pretty easy. They just print it out of thin air, and bam, they've got some tokens that their users can use to interact with the chain. Is it like, I haven't really thought about this before, but it's begging the question to me, like, is it harder to start one of these just like from 0 to 1 because of that?
No, it's fairly easy. I think so. We will start with 15 different full nodes. Like in your roll-up terms, you could call it like we'll start with 15 different decentralized sequencers on day one. They'll be globally distributed, and it's actually going to be mostly the big Ethereum node operators. So they also see the light and see like, wait, I can run a full node on the Spiderchain and get a share of the Bitcoin gas fees. And so they suddenly see that. And so we're choosing these 15 parties. We will run one node as Botanix ourselves, and then all the 14 will be big company entities spread around the world, all using different infrastructure, and so we will be quite trustless from day one. We won't be able to upgrade if the rest doesn't want to upgrade anymore. So, in essence, quite an interesting case from the beginning. And then we hope to grow from eventually from 15 to 100, from 100 to 1,000, and basically go from there. But in terms of bootstrapping, I mean, from block 0, you can basically send Bitcoin there, have the Bitcoin on your MetaMask, and do whatever you want with it.
I guess it is. I really am not sure if actually, I think I know that I haven't myself spent time looking at a Bitcoin native gas fee network launch from scratch that I'm aware of. I'm sure maybe there are some, but I'm not aware of one. So I'm excited to see this, how that goes. So what prevents the node that I sent to my deposit address of my on-chain Bitcoin from, say, absconding with my Bitcoin? Or let's say, or said another way, how do I exit from the Spiderchain if I want Bitcoin back, whether it's what I originally deposited or whatever I have in my EVM address on the Spiderchain? How do I bail out of there if I need to or I want to without,
Yeah. It's fairly easy as well. So you send Bitcoin on the EVM, so from any wallet, you send that to a burning address. Once that transaction is confirmed on the second layer, what will happen is basically all the different nodes that run the full EVM see that burning transaction, And that puts in a process where Bitcoin from the last multisigs or the last UTXOs start signing and basically withdraw that, or like sign the UTXO and send it to the wallet provided by the user. So basically, in your burning transaction, you will submit as text your Bitcoin address.
Yep. So then, because there's, like, again, if it were one node, they could just decline to send that Bitcoin. But because it's many, is that the idea that, like, is there a penalty for a node that decides not to enact that transaction? Or
Correct.
Yeah.
So we run a proof of stake. Actually, this is a whole different topic, but I used to be a big proof of work maximalist.
Yeah.
Until I realized that a proof of stake on top of a proof of work is completely different than a proof of stake on the base layer. From a technology perspective and from a trust perspective and a attack surface perspective. But yes, exactly. So basically, if someone signs the wrong transaction or doesn't do an action or suddenly isn't live anymore,
or changes the deposit address to their own address, right?
Exactly.
Yeah.
You basically get slashed, and that's where you get that consensus coming into play. And so the only thing you need to do as a user is see that the network is sufficiently decentralized, very similar to like a Bitcoin. All the trust comes that not a single party has more than 51% of the hash rate, and so you trust that decentralization aspect.
Interesting. Yeah. So it's a proof of stake consensus network that has whatever trade-offs and benefits that would normally have, basically. is the
Exactly.
idea. And then they're all running that software that tells the node how to sign the withdrawal transaction and what to do, the process. And if a node alters that software, it will fall out of consensus anyway. Is that the idea? So
Correct.
And like, if, like, two nodes try to steal my money, but the other 13 are like, no, this is the correct one, like, the network will do that one instead, basically.
Exactly.
Yeah, just the transaction goes with consensus of the nodes, I guess. It's interesting.
Exactly.
All right, let's step back a little bit. I have a lot more to learn about spider chains. I think they're very interesting. I love, even more than passing judgment on the technology decisions that you guys make, I just love that there's a different, it's not yet another roll-up. I love roll-ups. I think they make, like, palatable trade-offs depending on what you want them for, but very, very interesting. I encourage our audience to learn more about how it works, but let's step back and talk higher level. What types of applications and uses and features and capabilities are we going to get on the spider chain, Bitcoin users or these users? And why is that interesting? Like, why do we need the spider chain?
Yeah, good question. I'm going to go extremely high level here. So I put together this theory like 2 years ago, and I want to see a whole world running on Bitcoin as the money. That's where I would like the world to go to. And so if you think about every transaction in the world, if you buy a house, if you take a loan, if you buy stocks, I want you to use Bitcoin for every transaction in the world, either from B2B transactions, B2C transactions, just customer to customer, sending money. And so what you need for that. And actually, very interestingly, on Ethereum, what you've already have seen over the last 4 years with DeFi, and a lot of like the inventions, is that we've been speed running the traditional financial system, but then in a 10x better version. And let me clarify with like specifics on that. For example, what you see with tokens, I think they're a better version of securities. They're global, they're permissionless, open 24/7, and ruled by code. Compare that to your today's stock exchanges. I mean, there's so many downsides, and it's not open, global, permissionless. Why doesn't someone in, for example, Egypt can buy all the stocks on the Nasdaq, for example? It doesn't make any sense. And you go back to this logic of Balaji's network states, and that open global network will eventually always win out. And so I can see tokens a better version than your current today stocks and securities. I can see decentralized exchanges are a better version of the stock exchanges, or a 10x better version. I can see the market makers that you see today are the hedge funds that we have in a traditional finance system. And so all these principles of our old traditional finance system is now being replicated in a 10x better version on Ethereum in these smart contracts. And if you believe that that's a world that's better and you want Bitcoin to be used for that, you go back and it's like, okay, what type of layer 2 do you actually need for that? Okay, Bitcoin on a base layer, absolutely best money ever made. But what if you want to have that financial system, right? And so that's where I put the thesis. Like if you have a roll-up, having a financial system on that doesn't make that much sense, because then you give one single country in the world suddenly a huge amount of power over your global permissionless stock exchanges, which you want to be global permissionless. So you kind of want to have that second layer where you build that financial system to actually be decentralized. Otherwise, you lose the big benefits of having that better financial system. And so that's where I put together the theory. Okay, I want that better financial system than what we have today. I want that to run on Bitcoin. And it makes the most sense that your layer 2 needs to be decentralized for that.
Very interesting. So then is it fair to say we can expect DEXs, loan facilities, tokenization platforms to emerge on the Spiderchain?
100%. And I hope that actually happens. So one of the most obvious use cases today is like, okay, I want to buy a house, but I don't want to sell my Bitcoin for it. Now you have something called Aave on Ethereum, where you can actually, you have to use wrapped Bitcoin for it with all its trust assumptions, but you can borrow stable coins against your wrapped Bitcoin. And use these stable coins, you go to traditional fiat system and buy a house with that. That's a perfect mortgage and loan system and borrowing system. And so it makes the most sense that you can actually do that natively on a layer 2 on Bitcoin using actual Bitcoin instead of wrapped Bitcoin.
Do you think there's demand from the current Bitcoin user base to do these types of financial activities, quote unquote, on Bitcoin?
100%. I actually think it's bigger than a lot of people estimate. I never believe in something like the Bitcoin user base as a singular system that has a singular thought. That's just not reality. And I actually think there's a lot of people that are active, for example, in Solana or like Ethereum, that actually still own Bitcoin. And totally, if you would ask them, like, what is the best money? They would say Bitcoin, but they cannot do anything today with it because there's no infrastructure to do it. I mean, you can buy ordinals and wounds and BRC20s, and that's the limit. And so that's where the power of a virtual machine or like an EVM comes into play.
I think it's really interesting. That's one of the core questions, other than the technology, that I wonder about is you have so much of the Bitcoin. Again, I totally agree. It's not a monolith at all. But if we think about sort of like mainstream Bitcoin culture over the last few years, I think it's certainly less in the most recent years, but certainly the 2018 to 2022, 23 class of Bitcoiners is almost uniformly focused on hodling, on Bitcoin as a store of value. And it is, by the way, and you can still use a store of value. To your point about taking a Bitcoin-backed dollar-denominated loan, that is using Bitcoin as a store of value and drawing from it. But yes, that's what I wonder about. Is the absolute level of demand for more expressive capabilities that are on Bitcoin, no matter which medium or L2 they're using, but also then from where does that demand come? If we say, okay, I look forward a year and we say there is a lot of demand, well, was that mostly from the Bitcoin on-chain user base, or was that, say, bringing people back from Solana or Ethereum who, but for Bitcoin's inability to provide those services, they would have been there already? Like, do you think, again, it's probably both, some version of both, but, to what extent do you think, let me rephrase it a little bit, to what extent do you think spider chains or rollups on Bitcoin will suck users and capital away from Ethereum and its world?
Yeah, I mean, overall, from a higher level, you just have this power law that everything aggregates to the biggest liquidity. One of the reasons the US is so powerful is because of the US dollar reserve currency, why the New York Stock Exchange is the biggest stock exchange, and everything draws that towards that liquidity. And so Bitcoin is a black hole that would draw everyone back in, both from the fiat system and the rest of crypto. Now, that said, I think in terms of the user base, it depends on how you define a Bitcoiner. Is someone who is a founder of an Ethereum dApp that is a massive, that loves Bitcoin and would want to build it on Bitcoin, but ended up building on Ethereum, do you call that a Bitcoiner or not? I would consider that's actually a Bitcoiner, but those people will 100% come back.
Interesting.
And so if I would want to split it, I would say like 20% of the people are going to be the people who are only active on Bitcoin today.
I see. So you activate existing Bitcoiners who don't do any of this type of activity. I think 20% of the Spiderchain users might be those people.
Exactly. And I think the rest of the 80% are people who are active everywhere outside of Bitcoin in crypto.
But they may own Bitcoin,
still
they like
own
Bitcoin.
They like Bitcoin. They have Bitcoin in their cold wallet, and they don't do anything with it. And then with all the rest of their crypto holding, they leverage on perp dexes, they take loans, they do airdrop farming, they do a bunch of different activities, but they still have the Bitcoin in their cold wallet. Everybody considers it the best money. That's a funny thing that a lot of Bitcoiners often forget. Everybody in crypto considers Bitcoin the best money.
Yeah, there is a class of Ethereum maxis who think that sound money means simply deflationary money, but of course, there's one in particular who I won't name, because it's not like screw him or anything, but they always post that picture from like, I don't know, ultrasound.money or one of these websites where it's like, oh, Bitcoin straight line inflation going up, and look at ETH, it was deflationary the last day, and we're like, I don't think you guys understand that it's the unchanging nature of the line that makes it sound money, not the whatever on whichever day the actual absolute level of inflation actually is. I think you're right, though. I think there are a lot of people who use other networks, may not even talk about Bitcoin, but still use Bitcoin. I do think there's a really interesting world we're headed to. It sounds like whether it's Spiderchains, whether it's rollups, are you pretty confident? How confident are you that we're going to find ourselves? If we do this interview again in 3 or 4 years, are we going to? Is doing stuff on Bitcoin going to mean something vastly more than it does today? Like, are people going to be doing a ton on these things, you think? How integral to the ecosystem will they become?
I think so. Like today you have, I don't know, $10 to $20 billion of wrapped Bitcoin on Ethereum. And that's where you'd have to take the risk of a centralized company headquartered in the US. And so the rest of the world is super scared of wrapped Bitcoin, actually. That's what a lot of people forget. It's like, what if the US government seizes all the wrapped Bitcoin? Like, then it's game over for all those governments around the world, or like people or like institutions. And so if you do it on Bitcoin, that is way more trustless. And so if $20 billion of wrapped Bitcoin is the market on Ethereum, the market on Bitcoin itself will just be way bigger. And so I think it will take a few years, and that's just technology risk. Nobody trusts a fancy new technology on day one, right? But if this exists in 4 years, is stable, is secure, then I think in 4 years this can be really, really big. Just like I said, all the liquidity will pour back to Bitcoin. And from a perspective, from an application, like let's say if I'm a founder of an Ethereum application or an EVM application today, do I deploy on Ethereum with exactly the same smart contract coin, or do I deploy on a Bitcoin layer 2, where today there's zero market and there's $1 trillion waiting for you to grasp, and the effort or like the lift on the code wise is exactly the same. And so Ethereum, very crowded market, smaller market, or Bitcoin, greenfield. And so it makes the most sense that we'll all like move over, but there's still a lot of technology risks involved there.
Okay, what are the? You said Spiderchain. You have a live test net. People can test. What's the timeline on launch in your mind at this point?
Yeah, that's a very good question. I think we've been very close to code complete for last like 2-3 months. I think we underestimated how difficult distributed peer-to-peer networks are. Like our first version of the testnet was actually a single node, like a database, like a rollups. That's actually super easy to run. Like, you don't have the gossiping, you don't have the networking. And so over last month, we've been facing a lot of like the networking issues.
Fault tolerance and all that type of stuff. Yeah.
Exactly, and getting that consensus into place. And there's a lot of edge cases there. And so that was tougher than we imagined. So that's also, I think, the power of those distributed networks. That's where I think lies like the real big technology benefit. But yeah, I think another a month or two of like internal testing, debugging, auditing, and then we'll bring that to mainnet.
Oh, wow. So
I
you
want to launch an absolutely stable, secure product.
that makes a lot of, yeah, for sure. But you think by the end of this year, there'll be a mainnet launch? Is that?
Absolutely.
Oh,
Yeah.
wow.
Yeah.
So we're really entering this Bitcoin season 2, it sounds like.
Yep.
That's going to be, and again, I don't know all these teams at all, but that sounds like the Spiderchains will probably hit mainnet before the rollups do, which I know, because this is the other thing, one maybe last technical question here. They're all struggling with the bridge. That's, I think, the core question, right? Is like, because they have only effectively one node, because they have a centralized sequencer, a multi-sig is just like however good they decide to make it. Like, no shade on like Polygon, but they used to get a lot of crap for this because it was like a 5 of 7 multi-sig that was just like whoever the Polygon association or whatever it was, like, sure, they were like, we have people in different jurisdictions, but it was arbitrary.
Yeah.
It wasn't,
it was a 3 out of 5.
yeah, maybe, yeah.
Very
So
low.
now a rollup could launch right now with a bridge like that.
Single
That's
multi-sig.
totally doable, right? Like, but then you're placing a lot of trust in that, and so they're all looking for ways to achieve a similar, even if it is literally a multi-sig, they want that unilateral exit capability that Ethereum rollups have, but that's difficult, and that's where people are working with BitVM and all these things. Really, there's a lot of experimentation happening there, but I haven't seen somebody, claim that they've solved it yet. But yours doesn't need that because Spiderchains it is a multi-sig, but the security of the multi-sig is secured by the decentralized proof of stake network itself, right? So
Correct.
So that you're when you talk about working on distributed networking, that's you guys are building a blockchain. Basically, that's the hard part.
We're building a distributed network.
You have to
That's
build
the
that
hard part.
distributed network over here, and that you put all the effort into that. Whereas they don't need the distributed network on the roll-up because it is just one computer, effectively. Yeah. But they got to build the unilateral exit. Otherwise, it's just like it's actually a centralized exchange if they don't, right?
Yeah, exactly.
So wow, I think this is really interesting. I think Bitcoiners are about to get a really interesting variety of ways to do more with their Bitcoin.
Yeah, and you need all of those. Like if you actually want a whole world to run on Bitcoin, you absolutely need that. When we need to, as Bitcoiners who just want to have a store of value, I think that's really dangerous. Like I'm mostly afraid if all the Bitcoin ends up with ETFs, ends up with central banks to back their fiat dollars. I mean, that's when we have lost. And so ideally, I want the whole world to use Bitcoin as a money in every transaction in the world. And you need a lot of scalability for that, and we're not there yet.
Yeah,
so I think rollups fit in that place. I think Spiderchains, BitVM, you have the Lightning Network for fast free payments, and so you have it's awesome. I think we're finally moving on from that store of value in the initial phases of like medium of exchange. Very exciting.
Very interesting. Willem Schroe, founder, CEO of Botanix Labs, building Spiderchain on Bitcoin. Willem, thank you so much for coming on Galaxy Brains.
Thank you, Alex.
That's it for this week's episode of Galaxy Brains. Thanks to our guest Willem Schroe, CEO and founder of Botanix Labs, building the Spiderchain L2 on Bitcoin. And of course, our friend Bimnet Abibi from Galaxy Trading. As always, everyone have a safe and happy weekend, and we will catch you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.